stall or come to break or need a pause or maybe even comes to an end. That's the meaning of the quotes delta. It's, as mentioned, it's hard to follow in very, very fast instruments or for very fast instruments. Okay, limit order book dynamics. I would like to skip that because the only exception is if you have questions, because this is, I put this into the documentation for you on own knowledge, to come back to get a very quick overview about the limit order book, how it is built, and about the dynamics. And we see this dynamics all today in the book. It's flickering up and it's flickering all the time here in the S. And it gives us information about the market. But will be very, very hard. Let me say that very openly. It will be very hard to follow this information all day. You can't watch these numbers going up and down, but for 5-10 minutes, okay, but not the whole day, in my opinion. So it gives us information. We understand the auction. We understand the auction process, but we need look here. What happens? They added 1,000 contracts at 84. And suddenly, in the book, on the ask, and we will talk about that, and then they canceled that immediately here for some reasons. That's what we want to see. That's what we want to understand. That's the language of the market language. And then this is what guides us through the trading day when we are in, when we see the reasons, when we find our sweet spots to execute. Okay, LOB excuse me?
Walter, one question. Did they cancel or did they get consumed?
No, they canceled. Here.
How you're able to tell?
They canceled.
Okay.
Clear cut at 5:01. What is this? This is 11:01 your Eastern time at 84.
Should then be there a minus number from your indicators?
I
see that all the time.
Yeah. Good question. Excellent question. Would you mind make a notice and send it to support@ttwtrader.com? It would be very helpful, because you are right. We did it for the relative liquidity. We will talk about relative liquidity. So when relative liquidity comes in the book, I don't see anything right now here.
What time is it then, Walter? I should write about. Exactly.
It's my time 5:01. It's 11:01 Eastern time.
5:01, yeah, European time. Okay. Okay.
Let me just check this. Yeah, okay, I did it wrong here. Oh yeah, okay, I have had the wrong number. You see, we will talk about this changes in the book. It's impossible to see that in the DOM. Therefore, we added this guide for everyone who wants to see that and understand. We will talk about that maybe today or tomorrow. We will see that. Okay, DOM on chart. Yes, that's exactly what I have here. And I would encourage you really to put it on your chart. It doesn't cost you it costs you nothing, but it gives you the maximum of inspiration, of course, and information as well.
Hey Walter, this is Frank again. I think the reason you can tell that it's cut off and not consumed is because if I'm understanding Bookmap correctly, you would see dots that are actually touching that line showing consumption, but you actually see a break.
Yes.
And because of that break, you know that it was canceled versus consumed.
Yes.
I think isn't that the way Bookmap works?
Let's just take a minute for this, what we talked about here. 84. And therefore, guys, you will see how great the idea of a dome is. You will see that. Look here, 4684 even. 4684 even. Here. You see what we have in the book. 158. And currently at that moment when I slid it, when I slid the workspace towards right, we have 223 traded at 4684 even. You see that? Everyone with me on board right now. We will make a short coffee break, so be with me for the next few minutes. We'll take a coffee break right now. So 4684, and now go back. It now slide the workspace towards 84, and you see what happens here. That's the point. You know, when you are the Bookmap has an invaluable function that's recording. I encourage you to record every day, every session, your instrument, stock, future, whatever it is. It doesn't matter. And then have a look here. It's 4684. 4684, and you read 1,213 contracts on Ask. And when we are going back to the beginning, I don't know whether I can find it. So at that moment, 4684, we have had only 96, and suddenly someone comes in with 624. They added nearly 600 contracts at this time. Then we are sliding this to the left, or moving this chart to the left, and suddenly from this 600, the 600 became 1100 or 1200, or 1180, whatever. That's, guys, that's not something we can really make money, blindly money on that. But this is an information. This is some real-time market information. This is real time. So now 1213, as Frank said, mentioned, they cancelled it at this point. And this is as well an information of the market we should not ignore. It's not maybe when we are in a trade, given this is our sweet spot here, we entered the yesterday's closed institutional level and the gap here around 78, and we are just hoping then for more. But we should be very cautious when we see this behavior here around 84. Maybe we got 4 points. That might be a good outcome. Okay, we live and Dome and chart. Okay, we talked about that. And before we proceed with liquidity, volume, price, dynamics, and so on, I would suggest to make a break. Okay, let's do a break not longer than 10 minutes. That means let's come back latest and 11:20 Eastern time for the European guys here, 5:20 yes, European time, and then we will continue to discuss liquidity, volume, and price dynamics. Okay. When we talked about the goals of the seminar, I just wanted to make my goal is to show you how you can be confident in your trading. Okay, liquidity, volume, and price dynamics. This is the next point we should discuss and see live on the chart here. I think you understand right now why liquidity and volume why the understanding of liquidity and volume is important. Why to make the difference between liquidity and market volume, or aggressive volume, if you want it that way. Just a very clear statement. I think it's very easy to understand, but I repeat myself. This is a slide from my previous presentation, that liquidity is the blood of all markets. I mentioned that, and we talked about that, the importance of liquidity a few minutes ago. And by the way, liquidity, it doesn't matter when we are talking about liquidity in the trading, or liquidity of providing vegetables, fruits, other goods, or cars, other appliances, whatever we are talking about. There must be a certain liquidity, and there must be a price who is the fair price for a certain good, and liquidity must be established, and must be in every market, available for every market. It is applicable to all markets. That means futures, stocks, ETFs, and without liquidity there is no trading. We will see, and we discussed already a little bit about markets of liquidity, if it provides liquidity based on the quotes delta or not. A very nice example we saw right now based on liquidity, and based on liquidity was here the liquidity at this is Z1, that's the 30-year bond. Yeah, Z1 at 160.16, where this quotes delta supported the price here. The price bounced back a little bit, and then now you see there's a pressure on the ask. That means that could be really hard here for the price to rise further. We will see that, but it doesn't matter. Liquidity will acts as a support or resistance. And liquidity always attracts the price. Let me show you an example, a live example here. Liquidity always attracts the price. We will establish a rule based on this liquidity, or based on liquidity, not this liquidity, but based on liquidity. Is the market started? The market started, and we saw liquidity first at 46.85, then 46.80, and then 46.79. By the way, before the open, we will talk about the institutional levels. They are amazing, simply amazing. This is not my invention, or this is nothing I'm promoting, selling, or whatever I'm doing for that. I'm just sharing that. Then they are based on options, and when we are watching these levels here, we see how important they are for the daily trading. Some days they are working extremely well. I would say the statistical probability for the successful trading based on institutional levels is maybe 70%. I have never tested it. It's just my opinion on that. But you see, liquidity is always a magnet. Liquidity is always a magnet. Please keep that in mind. It's a simple sentence. It's a simple sentence you should keep in mind. Liquidity is the blood of every market, and liquidity acts as a magnet. You see, the first target was 85, the second target was 80, 81, and the third target was 78, 79 here. Based on pure liquidity. We are not talking about anything else, just liquidity. That's really amazing to see and to understand this liquidity concept. So liquidity and attracts the price. Liquidity is easy to manipulate. As mentioned before, it can be cancelled in a second. It can be added in a second, not second, but maybe millisecond. As you can see, we will talk about this phenomenon here, because this is a language we must understand. We have absolutely changes and relative changes. Look here, what happens here. And liquidity can disappear from the market very, very fast. And therefore, there's always a practical discussion between those who are using the ordered book or the DOM. Maybe especially Peter Davis is very busy with jigsaw trader, because it is really hard to, as I mentioned before, follow the pure order DOM. For some of us, of course, maybe not for all people, for all traders, but for some of us, of course. Okay, good. Liquidity is a constant. Liquidity is the blood of the market, and liquidity acts as a magnet. Who provides liquidity? I mean, everyone. We can. Let me just see. There are some questions here. With so much to focus on, you feel liquidity is... Yes, Chris. Liquidity is the number one, because without liquidity there is no life. Period. That's really simple. Where do you get the instant level from, Walter? And do you use SpotGamma? I'm not talking about my sources and my associates I have who gives or provides me the institutional levels. They're coming from a big institution. That's for sure. Therefore, I'm calling them institutional levels. I'm using SpotGamma levels as well, and most of the time these institutional levels are coming or crossing or sharing this SpotGamma levels on some days. I'm not sure. I think Jay knows that for sure. When you're on Twitter, I'm following Cem Karsam. Not sure if it's known. If he's known for some of you, but he's a very good options trader and great options trader. There are several other. Cem Karsam. Yes. Cem Karsam. Not. Yeah. I think it's he is it. And I'm following Perfiliev. That's a really nice guy. I will meet him next year. And yes, you must follow them. And you will see that sometimes Cem is providing some levels or posting some levels. And these levels are very close to that what these institutional levels are. We will talk about that, but I can't explain more than I have. I'm sharing them for free so far. I'm on Twitter as well on in the Discord room as well. And what you see on my chart, this is a voluntary work from, in this case, from Chuck, who is adding this to the cloud nodes, and these cloud nodes are for free. Who provides liquidity? First of all, every one of us here in the room can or provides liquidity. Given you are sitting on a liquidity level or on limit level, on a resting limit order level. Let's say you are buying, then you will sitting on a bid, or you are selling, you will sit on the ask. So every one of us is a liquidity provider in the sense of a positive meaning. Negatively meaning we are as well liquidity providers, because when we are losing, we provide liquidity to the market. So we must stop losing money and be the liquidity providers. We should be liquidity takers. That means we want to be winners in this market. But anyway, first of all, we can say we are liquidity providers, of course. But even when we are talking about 100,000, 2,000, 200,000, and so on, retail traders in the market, maybe a little bit, maybe more. So they are split in between different market stocks, future markets, and so on. It is for sure not enough to provide all the liquidity we need to get first the best fill and to exit the market without any slippage. That means we need to have a sound and good liquidity in every market, and that's the goal and the task of option market makers, because they make it possible for hedge fund, pension funds, portfolio managers, and other market players to trade their option against the option market makers. They are providing this thousands and thousands and not millions of contracts, whatever we need for different markets. So these big option market makers are playing in completely different play. What we are doing here, we are retail traders. And what we are doing here during this seminar and the next days and the next weeks is to understand the market mechanics and try to find the best, yes, I'm calling it the sweet spots. I love this expression, sweet spots, for us to trade either in day trading or to make money in day trading, or to to hold a trade maybe during a few days. So that's possible, but that's possible for sure. That's feasible. Yeah, of course, it depends on your market view. Of course, that's important. But we want to we want to trade the market. We can't provide 500 million, at least I can't, 500 millions of to sell into shares, or to buying to make my delta to keep my delta neutral. I'm not in the position to do that. I'm sure some other hedge funds are even not in the position to do this. Even the pension funds and other funds which are around here. So we rely on this big guys in the market who really provides this liquidity to us, and this big player is this option market makers. Let's call it a big player. There are for sure different big players in the market. They provide this market makers and hedge their residual exposure. So if we are thinking metaphorically, we can say that this big player represents all dealers and market makers in the SP 500 option markets. And hedging of options is mainly done in the SPX. We will talk about later on tomorrow, or maybe on Wednesday as well, and stock market. But this hedging has an impact on the E-mini futures as well. So be sure that we rely on other players in the market who has more who are better informed than we, who has better weapons, who are strategically better positioned than we are. So at least I'm not in the position to, as mentioned, to play and to trade 500,000 contracts a day. But these guys for sure are to move $500,000 or $500 million, or even $500 million a day to keep their exposure as low as possible. Just one word. I added this slide intentionally to the presentation to make following clear. When I started with Pesavento and Bryce Gilmore, then these guys have been traded, were trading the harmonical patterns for years. That means they have been in the market in the 60s and 70s. And they told me, or I learned from them, that at a certain time, I don't know whether it was the 80s or whatever years it was, they have to trade the cash market, the SPX cash market. And that means they have to, for every contract they are buying or selling, they have to pay, I think it was $500 a turnaround. $500 a turnaround. In other words, not everyone was in the position to trade the SPX or the cash future, because it was so big, it was so enormous. So you had to have a lot of money to trade a contract in the SPX future. That's maybe also if we come together and for a beer or whatever, and discuss why is Elliott waves is not working today, not so as it worked 20, 30 years ago. Or Mr. Gann, Mr. Elliott, and the others who had brilliant ideas in the 20s and 30s. This techniques doesn't work reliably anymore because the market is fast, the market changed very fast, and that's simply the reason why these techniques are not reliable anymore. The idea to add this just to bring it to your attention is that the contract was the CME, the E-mini, and E stands for electronically traded future, that was introduced in 97. And the idea was to open the market, this trading market, for the normal, let me say for the normal people, for us, for the retail traders. Because the SP contract became too large for many small traders. And the E-mini quickly became the most popular equity index future contract in the world. Then the Nasdaq came up, mid-cap 400, and so on. You name it. And I think it is really not hard to understand why they opened the market. What do you think? Why they reduced the value of the SPX to the E-mini, and today we have the micro. Come on, guy.
They needed liquidity.
Liquidity, and what else? When you think about this industry, so the exchanges. This is a multi-billion-dollar industry. And I tell you what, every cent counts for them. Every single cent. Commissions, right. They want to make money. They want to make us to pay commissions to them. They want to make us. They are selling information like data feeds or data. No, not data feed, but data. They are demanding 1 small cent for every turnaround. And you can imagine that opening the market to the E-mini and now the micro is nothing wrong. It's great. But guys, we are the prey. Be sure we are the prey. And we want no longer to be the prey in this business. That's what we should try to achieve this week, and hopefully I can help you to achieve this goal this week. So be sure that the opening the markets, Frank, opening the markets for us, for the retail traders, is simply luring us in. Look at the crypto market, how insane this crypto market is. That simply, watch the, what was the stock? The I think it was GameStop. What happened? What is happening with this markets? This is simply to get your best. The market wants to have your best, and that's your money, guys. That's your money. So, yeah, that's your money. They want your money, and therefore they open the micro market. Although I must say the micro market has a big advantage, because it gives you the chance to start trading without the fear to lose a lot of money. Okay, so far to the liquidity. And why is liquidity important? Because we will understand in our strategies that liquidity is the main part, and that was a comment from, let me just see here, Chris. Yes, it was a comment from Chris here, that liquidity is the main focus we should look at. That means for futures, stocks, ETFs, whatever. I don't have any experience in cryptos, so I apologize, I can't talk about cryptos here. But as I see on some Twitter accounts, on Twitter messages, tweets, cryptos as well has liquidity on their charts as well. So liquidity is there. If without liquidity, no trading. How to analyze all liquid markets based on the actual daily long-term high liquidity and short-term high liquidity. We will see that. We will understand when liquidity deteriorates, is added or cancelled, and is used by short-term big players to position themselves in the game like chess. That's quite important. Maybe you are following me on Discord, in our Discord room, TDW Trader, and Doug is a friend, and he is just commenting the market perspective and view from his view, how he sees the market, and he's sometimes saying, okay, watch 70, watch 75, watch 40. Maybe you can remember if you're following or you are part in our channel. And excuse me. And that's because some big players are just canceling, adding, canceling, adding. Look here. You see, hopefully you see my screen. 46.90. We have had 100 here added at 46.90. Then suddenly we have added, we see an addition on chart here at 46.70 plus 75. Then we see 60 cancelled, that was for sure before. Then added 50 here at 85. Cancelled 50, added 300 here. Guys, ladies and gentlemen, look here, 64. This is a language. Maybe some of you are following National Geographic Channel, and then maybe when you watching their channel, there are some nice documentations about humpback whales, and how they are communicating in between. Simply they are communicating by, I don't know, singing, sending a sound, and that's what you can see on chart. That's a part of the liquidity tracker, and therefore I see that's really the Trade Finder is a genius tool when you understand what to look at and what to see. So the cancel, look here, they cancel immediately 50 and added here 64. This is at least not me. Or maybe some of us who are really in the position to add and add silently or hidden orders in the book, 50, 60 or whatever. This is a strategical approach from someone, whoever it is. It is hard to discuss. You can call it a big player, small player, he, she, it, diverse, or whatever you want to call them. And they are placing their orders around in the book here. If something happens like this fast drop down here, what it was, I don't know, I haven't listened, maybe there was a message, whatever, I don't know, it doesn't matter. Then you see how they are positioning themselves here in the book. It doesn't mean that they want to be or will get hit here. But it's most likely that maybe the 64 are traded at 67 because of the volume here. That's what we need to understand, what we need to see. Not to speculate, who is this? This is Goldman Sachs, and this is another one. And we don't simply know who is behind this activities here. We can't only add one and one and one and see what might happen or what is going to happen. You see liquidity here, you see liquidity here, you see liquidity there. So options are an important part of our trading. Not that we are. Maybe some of you are trading options. No, to me, I'm going back to the questions here. Was there anything on Bookmap or your tools that might have
Yeah, I got one
Yes.
question, Walter. Whatever they added, that plus 75 plus is a minus 64. Can we assume they're all limit orders?
Can we assume, excuse me, all?
They're all limit orders. That's a
Yes,
liquidity.
yes,
So it's all
they
can.
put,
They are all. So they are not market
yes,
orders. They are all
yes,
limit.
yes.
Okay.
Let's see if we can see that.
Yeah.
4670 was 199. Oh, yes, 199. Let me see. Yes, it jumped up to 384. So this number, others are joining this 70 level here, but we see with a blink of an eye here, we see immediately when that happens, the price was, by the way, the price was here at that moment when they added 75 and the price was far away. So that could be as well a very nice hint of the market that they are trading 70. But to answer Chris' question, was there anything? No. On book or your tools that might have predicted this drop? No, there was nothing. What we didn't spot that, but we can see back the market volume increased here dramatically. That's what we could maybe see here. I'm recording this event here. That could be a point where we see that. They broke to this, they absorbed this level here at 79. And they broke to this level here. But there was no sign before for anything that this mark is going to drop so hard at this time, 11:41 Eastern time here. There was no hint. What we can do in this case is just watching, look here, this high market volume, 3,800 right now.
Hello,
Yeah.
Walter.
Yes,
As I've already also written in the chat, as far as I can see now, I'm looking in Bookmap at the NQ at the moment. But if I look at the stops, which they are always for me a very good indication. You see a very big stop run just before the whole thing comes down, and you see these things happen all the time. Stops are, for me at least, a major indication of things happening.
Yes, Raimo, I think you are talking about this move between 535 and this move here, right?
Yeah, correct. It's, to be exact, it is in NQ. It is I think 17:35 and then 33 seconds. Yeah, and that's when they had a big stop run, and afterward it comes down. This is something that I've learned over the past 6 months, that stop runs are really a major indication of the big players playing around with retail. They take out the stops and then they make their move.
Yeah, Raimo. Yeah. I know what... I suppose you have the SI tracker and he is indicating the stop runs here, right?
Yeah, well, actually I use, as you know, perhaps another indicator for it, but yeah, it is. I can.
No,
share an
that's
image,
okay. Just,
sure.
yeah. I understand what you're saying. You are saying these are stop runs here into 82 and 84.
Yeah, well, I'm looking at NQ actually.
Yeah.
So, and in NQ it is very obvious. Yes.
In NQ we have had a sweep into this area here, very nicely to see a sweep, which could be, yes, which is maybe a stop run. I don't see anything else. The point here, why I'm a little bit cautious with I know what my colleagues are doing here, and let me say that you are considering this a stop run.
Well, it is being mentioned as a stop run by Bookmap itself. So I guess your indicator is mentioning is taking it as a stop run as well, right?
I don't see a stop run right here because let me you know, Raimo. Yeah, the point of a stop run, the meaning of a stop run is to get straight up, hit the stops, and then reverse the market. please tell me if I'm wrong or not wrong. So when a stop helps, when I stop, let me try to find maybe another. We don't have anything else here. I know, Reimer, what you are saying, what you are pointing at, but I'm not happy with this explanation based on from my colleagues here from Bookmap, because I know the SI tracker, and you will see this by an explanation on Twitter. SI tracker is maybe showing some small little squares up here into this area. Reimer, please correct me if I'm wrong.
Are you okay with me sharing an
Yes.
image? Yes?
Yeah.
Okay, I will do that now. Okay, just shared the image. If you can take a look.
Yeah, I see that. That's the point. That's by no means.
You see it as a big stop run, and they take it a little bit higher.
Oh yeah, you are talking
and
about NQ. That's NQ.
Yes.
Okay, NQ. Yes, that's not a stop run. That's a sweep, Raymond. I know this. And let me show you. That's a sweep.
Yeah. Okay. Well, Bookmap is calling
Yeah,
it a stop run.
because they don't have any.
Yeah.
I'm sorry for that. Just I don't want to blame them,
No.
but that's a sweep here. That's the same 70. Let me say 70-35. Yes, that's a sweep here. That's a sweep here. You see, we have it's the same here.
Walter, isn't a sweep considered? A stop run. Isn't that technically a sweep?
No. What they are doing is simply because how to say, that's really a critical situation now, because it will come on tape here. They call this a stop run here, but it is not a stop run. It is simply an absorption. In this case, what Reimer is showing us, that's a sweep. That means a sweep is a single order ID who sweeps through a level of ticks or prices. That's what Reimer is saying. That's correct, but it is a sweep because that happens in one order ID. And by the way, the Bookmap guys are copying us, not only with introducing the Telegram, but you see the newest edition of Bookmap is the sweep and absorption indicator they are doing, and they saw based on TradeFinder that the sweep is something else than they are trying to tell us or telling the people who are listening to them. Reimer, you are right, but that's simply a sweep what happens here, and you can see that as well here on the MVP. You don't need to spend this very expensive indicator. You said it here, and the TradeFinder is saying that's a sweep. That means this is we'll talk about sweeps in a moment. Sweeps in a moment. Yes, that's an absorption, and when absorption happens, there happens exhaustion. It's not at the top. What's a little bit more? It doesn't matter. But you are right. My view, and I want to tell you simply my opinion on that, is let me say it in other words. My understanding and my experience with stop runs is that you are going to hit, to go against the market. I don't have a very nice example right now. I don't have a nice example, a good example. You're going against the market, and then this 2-point up move or 2-point down move triggers stop, because retail stops are mostly 2 or 3 points. Let me say 3 points. So the market triggers the stops in a very fast up move. And then what happens when the stops are triggered? Yes, it should come down. Yes.
In this case,
Yes, absolutely. Yes, that's the point. They are coming down. So they are, when you want to trigger the stops, you want to get the opposite move, but you need some acceleration of this move. And then these stops are simply executed market, and that moves the market very fast from the triggered stops here. That's exactly. So, and that happens. We can see that, but I don't agree with Bookmap because I'm sure they don't have any clue what a stop run is. So, and the other, what I wanted to say at this all of tape, I think I should cut out this from the tape here. Now, what happens is following. They are using the SI tracker, and the SI tracker shows some small little squares here. Let me say where you see my cursor, and that they are calling, as my colleague Doug P is calling that a stop run. But please keep always in mind, Bookmap is aggregating data. These are all aggregated data here. If you want to see if this is a stop run, you have to zoom in. So we see here, and this was a very nice iceberg of 300 here as well here. In NQ we see this stop run where it was. Very good point. It's always an attention sign. Be very cautious with that. And in ES or in every Bookmap chart, don't believe that. Zoom in and see what happens. We will talk about sweeps in hopefully today or latest tomorrow. And you will see what I mean by stop runs or by sweeps, why they are important. Because this is by no way a stop run, because this is simply volume traded up. So they started at 82 and they traded, you see the time scale here. They needed 35, 1 minute to trade into 83, and then the next one, I don't know, here. That's the time. And when you zoom in, it's simply traded volume. There's nothing surprisingly here, nothing, really nothing.
Yes, but this is the ES one,
yes,
not the
yes,
NQ
that's the
one.
ES. And the Q, let's drill into a Q here. This is the sweep, we call it the sweep, and then the market accelerates a little bit more. If this is a stop run, then the market would trade back down, but it does not trade back down. It trades simply up, goes a little bit further up and comes to a stop. That's a kind of exhaustion here in the market, because there are no more buyers who are willing to lift the offer at 195, and then the market slowly break down or trade it lower, because simply there are no more buyers at this point. So I'm and then drop down. If you can use it, of course. What you're saying is okay. That was a stop run. We call it a sweep, and then they are run out of buyers here at 190. I'm very cautious. With that what my friends at Bookmap are telling the people, and when I see this on Twitter, I'm showering a little bit, because I'm sure if you want to see that, zoom in and see what really happens. We will see this. We will have this discussion with the sweeps here. So that's the point. The question is, let me just go back, Raimo. Give me a second. Oh, just lower highs. Raimo, there was there was a traded iceberg on NQ. We saw a sweep. MBO stop date. I don't know what you mean, Chris. They don't ever label sweeps. I don't know, Chris. I don't know what you mean with that. What I want to know is when to trade with sweeps and stop. Yeah. Let's put it back, because we will talk about sweeps here. Just to show you that this drop, at that point, I mean, hindsight, everything is explainable in hindsight, but at that point, you see sweep in NQ, you see high traded volume 81, and the price goes up. At that point, no one will know that the market breaks down so hard.
It's also in many cases a confluence of other signals. For example, the exhaustion or the absorption, etc. And I must say that I have some good entries when I see big runs, and whether you call it sweeps or stop runs, it doesn't matter. But if you see some big buys coming in, some big sells coming in, together with the absorption, etc., then you, in a lot of cases, then you see some big moves.
I understand
so
that.
that was actually.
Yeah. We will talk about this phenomenon in very, very shortly. So let's keep up this discussion when we talk about sweeps and volume spikes. We cancel the expression stop run because volume spikes are better to understand, and they are going in the same direction. So maybe we will find something, but let's keep let's stop the discussion. We will come back when we talk about sweeps. Okay. Okay, good. What I want to know is when to trade with sweeps and stop runs. Yeah, Chris, be patient. We will come to that. Why is liquidity important? As liquidity deteriorates, the implied volatility moves higher. And liquidity improves when the implied volatility falls. And Reimer and yes, ladies and gentlemen here in the room, I will show you where you can get a 100% confirmation what the market is doing. I'm exaggerating a little bit, but only a little bit. It's not 100% because there's nothing 100%. But we will talk about this entry here from another perspective where you can see what the market is doing. Give me a little bit time. I will come back to that shortly. Just to get some terminology clear and straight. So when we are talking about liquidity, I think it's a good point just to keep in mind that we have several differences in the liquidity. We have a long-term high liquidity, short-term high liquidity, and spoofing or very, very short-term bidding or offering. That's what I want to say. We want to go deeper with the liquidity stuff. You understand how liquidity is important and so on. If you have questions, please bring it up immediately, because it is important to understand all this nice stuff here we are talking about. Long-term high liquidity has I would say is priority. Priority number 1. Short-term high liquidity is priority number 2, and spoofing and short-term bidding or offering is priority number 3. That means long-term high liquidity lasts in the book for days. We have seen that weeks before when, I don't know, markets set on 44.50, for example, for 2 weeks, and the market traded around the 4400, 44, 43 something, and then finally hit 44.50 in 2 weeks. That's the short-term high liquidity. The short-term high liquidity, this is the long-term high liquidity. The short-term high liquidity is priority 2. It comes up like we saw here. That was an excellent example. I think this one here. That one where we talked about, I think it was cancelled. I think it was here. This is the short-term high liquidity. They bring up massive liquidity in the book. Oh no, that was this one here. This one at 84 even. So, and then cancel that. That's clearly short-term high liquidity because the liquidity was above 1,000. And spoofing and such small liquidity which comes up very, very quickly in the book and remains only a few minutes in the book and then disappears from the book. Just to keep it in mind, we should look for the bigger liquidity when we prepare for the day. And then Just a moment. I feel maybe I will find an.
You're not forbidden by the exchanges
Sorry?
now? Regular exchanges, I mean?
Excuse me.
Spoofing?
What is forbidden? Yes,
Spoofing?
it is. Yeah. So when I'm preparing for the day, I'm just watching the overall picture here. And then I'm seeing that there's more liquidity on the upside here. It's 4,700, but there's as well as liquidity at 4,675. So we have a long-term high liquidity at 47.25. Even if we broke down here, I'm not sure if this is in book, 47.25. Yeah, the liquidity, yeah, it's still there. So even if we broke down here today, this 47.25 is still in. It doesn't mean the market will go straight up, and therefore it is. I hope you understand. It is forbidden to watch for the liquidity here, and saying, okay, the market is going today to hit 4700, 07 and 25. That can be maybe in 2 weeks. That's not a conclusion that the market is going to trade straight up here. But you have an excellent view of the market conditions of every single market. That means, let me see Tesla, for example. Yeah, very clear picture of a stock. What's this? Very clear picture of a stock. Liquidity is down. QQQ, yeah, that's a little bit more harder to watch because the liquidity is around the price, which was never before. But you see as well at the beginning on QQQ, and we will talk about QQQ and SPY and the WIX these days. You see where the liquidity is. It's hard to believe. That's really hard to believe. But when you see these constellations here, the first impression should be that the market is likely to trade into this liquidity. And you will learn, that's my goal this week, that we must look beyond the fence to understand what the markets are doing. You see how they drop down. Even if you watch the QQQ, you can use and you must use the correlated markets. Just keep this smaller here. You must use the correlated markets to get a complete picture of that what you are trading. If you don't get, you are lost. Good, that's QQQ. We saw Tesla based on liquidity.
Walter, in QQQ, can you go back to QQQ, please? Those blue or blues, small blues liquidity, blue lines.
Yeah.
I believe is that spoofing?
No.
They're coming in.
No, that's not spoofing. That's simply they are playing with this liquidity here. I just switched off this the hidden liquidity changes because it's too much. So the point here, what we see here right now in ES, let me show you that. I don't know whether we see this today. Maybe you can remember when you are watching the book map that the liquidity, there was a liquidity band, maybe 10-15 points around the price. So there was red above the price and red below the price. This changed in March this year very dramatically. Until then, we have very clear